All right, so where did we stop on Monday? We're talking about market structure, right? Now, how are you doing? Now, can you hear me?
Yes, bro.
Okay, I was talking to the other guy, but I think maybe he's not hearing. All right, so we're talking about market structure, and we spoke about the um uptrends, downtrends, and the ranging market, right? We spoke about this. Maybe have an uptrend, maybe have price doing this. What's wrong with it? We spoke about price doing this, right? Uptrend and then downtrend. And we also spoke about when price is stuck between, ranging in the high and the range. So this is an uptrend, this is a downtrend, and this is a range, and this is a range, right? So in this uptrend, we spoke about higher highs and higher lows, higher highs and higher lows. And I also told you guys what a break of structure is and what is a what a higher high is. I told you that a higher high can be price making a high higher than the previous one, regardless of if it broke with the body or if it just made a high with the wick, right? It doesn't matter how it was formed. As far as the high was higher than the other one, it's a higher high. And if that higher high makes like the low that make the higher high is what called the higher low. And if price breaks that higher low, it's a shift. Breaks the higher low with the body. Same thing here. Once price makes what? A low that's lower than the last low. So this is the last low. Price makes a low that's lower than it here. And if this low, the high that made this low is what? A lower high, the last lower high. If price breaks it, the body, it's a shift, right? So these are the two best conditions for you to trade. So let's go back to the chart and I'll talk about. So today, like this is just a recap of what we talked about on Monday. So today we'll be talking more about what the micro and macro structure, micro and macro. So these two. So let us say, for instance, you look at the 4 hour time frame, and 4 hour time frame is an uptrend, right? A clear uptrend. By price makes a high, a higher high, like this, on 4 hour time frame, right? So price is an uptrend on the 4 hour time frame, and price is currently here, right? On the 4 hour time frame. And whilst price is here on the 4 hour time frame, price pulls back inside. Now, this on the 4 hour time frame is a simple trend, but on the lower time frame, like 15 minutes, you see something like this. Inside this one impulsive leg, you see something like this. Then this retracement will have something like this. Then this impulse will also have something like this. Then this retracement also, there are many structures inside it, right? So now, if you want to take a trade from here, you already know that your target should be to what? To make a new higher high, right? Your target should be to make what? A new higher high. So when you take this buy from here, right, it's safer to take this buy after the 15 minute has given you a structure shift because it would give you a downtrend incoming to your buy level. So taking the buy after the structure shift would make what a safer entry decision. But in most cases, price could just tap and give you a long week and buy and go up and you miss. So if you don't want to miss it, you could what? Try to take it sniper. Now, how do you take it sniper? You look at this area. You look for what? Break or structure or shift in this area on the lower time frame, the 15-minute time frame. When you look for that, you look for liquidity and the level below your liquidity, which should be what? The entry. Now, when you take your entry, you have to what? Compare the level. Make sure that this level is at what? Is also a level on other time frames. Use MTF. So once you are sure and you've gotten your level, what do you look for next? You buy. Where would you be looking to target? You're looking to target what? The 4-hour higher high. So now in this case now, this is where you stay on the smaller time frame and the structure won't be clear to you because once price is going higher, you won't know that price is going higher actually to take out this high. And you'll be looking for tons of sales from levels around here and you get stopped out multiple times. Or price would react and take you out. You get stopped out multiple times before price finally what makes a higher high again. And just like that, just like that, just like that. And that's what. So now on the 4-hour, this is what the macro structure. While the structures inside here, like this structure on the 15 and 30 minutes, 45 minutes, these structures are your micro structures. So let's look for some chart examples. Let's look for some chart examples here. It's even evident from here that I look at the daily. As you can see this daily time frame now, as you can see the daily, right? What do you see on the daily? Daily is giving you the macro structure. And what's the macro structure? You can see from here, you have a low, high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high, right? Now, inside this sell leg, there are so many moves that happen. This buy leg, so many moves happened. So now, how do you take this move to the upside? How do you use this move to the upside? As you can see that the daily gave this move. So how do you take advantage of this move? Now let's say this is your macro structure, right? And this is your high. This here is your high. So let's write this down. So this is your higher high. This is your high. And the trend is uptrend. So you want to see price what make a new higher high for you. Right? So you go down to what? You go to a smaller time frame. Let's say you go to the 4-hour time frame. Now on the 4-hour time frame, what I say you look for on the micro structure, you should look for what? Breaks of structure that you can, or shift in structure that you can trade from, or you wait for price to shift again before you act. So let's say you go to 4-hour or the 1-hour, then you can act from here. Because here there was what? A low, high, like that. So there was a break of structure from here. Right? There was a break of structure from here. And you can now look for entry somewhere down here. I guess this was what price used, 4-hour level. Price used this 4-hour level, I guess. Let's see. Okay, well, this was the 4-hour level price used here. So This was the level price used. So now after this, now what do you look for now? Now this is where structure and storyline would pair together. I'll teach you guys here in this particular example what I've been explaining all along about structure and storylines. You are expecting a buy here, right? What is your target to make a new higher high? So now this is your bias. You want to buy to make a new higher high, right? Following the daily uptrend, you want to take a buy to make a new higher high because as you can see here, daily is in an uptrend. Right? The daily is in an uptrend, a clear uptrend, as you can see. So we are bullish on gold. Major structure on gold is bullish. So, and now you are on the 4-hour time frame. And now you're on the 4-hour time frame. And on the 4-hour time frame here, what is price doing? After you've been able to identify your level to buy from. Now, you want to see price give you, even if it's what, a shift structure. And if I want to give you a shift in structure, this is your last lower high. You want to see price what give you a shift in structure to confirm your structure so you can buy on a retracement, right? So now price has given you your shift in structure by breaking out of this area. So price breaks out of this area. This is your shift in structure. Right. So after your shift in structure, you want to buy, right? So you want to take a buy. This liquidity here is something called structural liquidity. I'll teach you guys this when we enter liquidity, whereby price will give you something like this. And this is why I said it's not only about the first pullback after break of structure. Then this becomes your liquidity. When price gets here, this one here becomes liquidity. The price to buy more. This is a structural liquidity. This is your structural liquidity, right? If you look at a trade I took somewhere around here, I guess I took the trade somewhere around here on 5-minute time frame, you would see I use this kind of liquidity. But we're going to talk more about types of liquidity when we get into we'll talk more about types of liquidity when we get into okay. Let me show you. We'll talk more about types of liquidity when we talk about when we get to liquidity. I don't know how many of you guys remember this trade I took here. And so many of you were asking me why my liquidity wasn't this one, the first pullback, why I marked this liquidity. Because it happened before the year. It's called a structural liquidity. I don't know, but that's just the name they gave it. I don't know. From when I learned it, it's a structural liquidity. So yeah, it happened before the break. And then but it still doesn't change that the POI below liquidity is your POI. That fact doesn't change. But the area you mark as your liquidity is now what changes sometimes. Sometimes. Mostly price uses inducement liquidity, mostly. So let's go back to the 4-hour. So here, so right here, let me take this off. So right here, price give you what a shift, and then now this is web storyline, and now you have your structural reasons to buy here. Let's say you're already in a buy from here because you already I've broken down the reason why you can take a buy from here. Let's say you already had this buy here. This buy was taken before storyline even started, right? Good. So you already had a buy from here. Let's say you already had this one. You already had this buy entry from here. You are buying from here. Target is a new higher high, right? So you're already taking this buy from here. And then while you are taking this buy from here, you are still waiting and price did this. Weekly level, this zone was inside the weekly and price was doing weekly, reject weekly. At the same time, there was a daily on that same level. The daily and price was also doing what? Daily reject daily. From this daily support, price was also rejecting daily. So now, price what? Is giving you a shift as well as starting a daily bullish storyline. Now, this storyline now is what? Confluence for your direction on the structure you are taking. That yes, this is the right structure. I don't know if you're getting my point. Now, this storyline starting here is like a confluence. It's proving the direction. For price to reject a daily support, it didn't break it, rejects it, and what starts um a storyline, a bullish storyline, right? It shows that what price is proving the direction. At the same time, price was also starting a weekly storyline from there at the same time. So this is where storyline and direction meets. I mean, storyline and structure meets. Like I've always been explaining to you guys, right? So, okay. So like I've been saying to you guys, storyline and structure. So this is where um you put both of them together, right? And you can see the result or the outcome of both of them. So now, if you want to take more confirmation entry now, how do you take it? You take it. If you want to take more confirmation entry, so where was I? Okay, so where was I? I was talking about okay, this area. Okay, I was on this area when we were talking about. Okay, now price have given you a shift in structure, and you have a liquidity seated right here. Now you want to take what your buys, right? This one. So now you can see that has agreed with the storyline has agreed with what with the storyline has agreed with market structure. So everything is pointing towards buys. So we go down to the 30 minutes or 1 hour, wherever, to look for what? Entries. Now you go down to 30 minutes and you look for more microstructure. And now you can see that um price gave you a shift in structure right here, and then you decide to play from this area. And that's as easy as it can be. You have a limit there. That's as easy as it can be. You can have a limit there and you get into the buys. You can have a limit there, you get into the buys, and once you're in, you can have your targets set for this high, or even just target here, you target the higher high. Now this will be the second entry on this move, and you buy till price gives you another high. So this is how you combine microstructure with macro structure to get your entries. You feel me? If you have the 4 hour structure, the 15, 30 minutes is the microstructure. If you have the daily structure, the 4 hour, 3 hours, 2 hours is microstructure. You understand? So this is as easy as it can be. This is as easy as it can be. Very easy. So you play from here. You are in, you target the high, this high, just like that, just like that. Then if you go to the 4 hour, so because now you are targeting this daily high, what would you want to do? You want to use what 4 hour structure to follow the daily, right? If you decide to play on 15 minute and other smaller time frames, it would be too confusing for you. So you rather play on what a time frame like 4 hour to make it easier for yourself. So this is your target, right? Daily higher high to make a new higher high from daily structure. So now you have this structure playing out for you, right? No, here, then here, here. So what you're focusing on, catching the higher lows, right? So that's what you're focusing on, catching the higher lows. So when you want to catch the next higher low, how do you do? To catch the next higher low, how do you do? You want to catch the next higher low, you do the same thing again, right? You look for what? Like I said before, you look at this area. If you want to catch sniper, you look at this area, right? And you take the minor structure, right? The microstructure here, right? You look for the breaks or shifts around inside here, you look for the microstructure, then you buy. Or if you want to take more conservatively, you wait for this one to give you a shift. Once this one gives you a shift, pulls back, you can take your buy target here, or you can, since you are following it with the daily time frame, you can make this your target or safest target here, right? Hope you guys are following. So let's see how that goes. Um, let me yes. So let's see how that's good. So you can so now you can do what you could look for what the minor structure, which is or the microstructure, which is your 15. You enter the microstructure, which is on your 15, no, 15 or 30. You could use that one. Okay, so on your 15, you can look at your microstructure on that leg, and you can see that right here we had some sort of what shift, some sort of shift from here, some sort of shift occurred from here, and there was a liquidity seated right here. Then your entry can come from here. You know, this zone, would also be like a 1 hour support level, I think. Then that's where MTF comes in. 1 hour support. Yeah, that's 1 hour support level from here. That's where MTF comes in. So you see how easy it is when you are trading like this. And now you know where your target is. You know what your target is. You understand that you are taking this trade to make a higher high here, right? Or if you miss this, you could wait for what? A shift. So you can see how the 1 hour did a shift from here. Yes, and wait for this shift and liquidity. Then this could be your entry, this could be your leg. For people who trade FVG, I don't trade this. But if you do, this could be your leg. If you don't, I think price use left shoulder. For SNR, price use left shoulder if you're looking at SNR. Yeah, left shoulder. So yeah. You could target here or target what? Higher high. So just like this, right? You're following the structure, uptrend, uptrend. And when you are selling, you know sales are for retracement. So even if you are selling, you might be selling to take out some liquidities. If you cut a sell, you could take a sell to take out some of the liquidities around, right? So just like that, sell to take out liquidities from there. And then you continue. You continue. Any question? Any question? Any question?
Yes, please. I have a question.
Okay, ask your question.
Yeah. Okay. I think the major challenge for me is considering you've seen a switch in the market structure and you're looking to get into a trade. Like you've highlighted here, you made mention of the fact that in some cases you would need to know exactly where you would take the trade from. Like this last example you showed us, you took from the left shoulder.
Yes.
We assume if one is taking the entry at the top, that's from the left shoulder. However, in some other instances, you would have said that the points to enter the trade from would have been from the last order block just before the shift, where we have the open close.
Oh,
Yeah,
this
exactly.
particular entry after this shift, right? You could get better view of it on the lower time frame. I just didn't want to go lower. So if you went lower, you could look at the structure and you could get a better
Okay.
view for the entry. So I just didn't want to go lower. Okay. If you were the kind of person that decided to go lower, 30, 40 minutes, everything is depending on time frame. Each time frame prints a different thing. So depending on which time frame were you looking at would tell you your entry. So if you're looking at a 30-minute time frame and you consider this to be a breakout structure, right? This could be
Yeah.
your liquidity after your breakout structure.
Yeah.
And you could get this entry. You could get this entry. Or if you were looking at price to come here, you could miss by a couple pips. Right? Or if you
Yeah.
decided to use 15 minutes or 45 minutes, I think somewhere there. I think maybe there was something there. Let me check. Okay. 45 minutes even looks better. This break, liquidity, and but price what missed the RBS. The only
Yeah.
place that price used here was what 1 hour left shoulder. If you saw anything, it was 1 hour left shoulder price used. The only so now the 45 minutes what gave you clean structure, but the 1 hour gave the entry point, the entry level for the entry, right? This is the kind of entry that I won't really see because I won't be looking at, but like from hindsight, I can see it, right? The entries that will be clear to me, even on live market, are like this one and this one. Like these are the kind of entries that will be clear to me on live market, but this one, particularly might not be clear on hindsight, except maybe on a different time frame, there was a clean support that was there. Maybe you can see even the 3 hour level, there was nothing. So this is not a very clean. This would be clear to some other people, maybe people who trade other blocks. I mean, FVG. It would be a very good thing for them because I saw someone who took this entry, one of my friends, he took this entry and he trades FVG. He took this entry from here. I think, yeah, took it as an FVG entry. So people who trade FVG would take this. But I personally will not see this on hindsight, right? Because even if I mark the structure properly, my entry, because looking from the 45 minutes, let me show you. Looking from the 45 minutes, I would mark exactly this, right? But my entry point would have been here and I would miss. So this would not have been my trade. Yeah, it's okay. It can happen sometimes. It's okay. It's fine. It would happen sometimes. And maybe when price comes back later, if price ever comes back, that this low will become liquidity for this level. If price ever come back later, this low created here would act as liquidity for this level now. Yeah, so, but it's just an instance of how you could take what more trades after a shift or, yeah, after you miss this one, you can use this other time frame structure to take. So this is how you can see how it's clear when you are looking at the big picture. But if you were stuck on 5 minute time frame around here, the entire market will look like gold wants to go to hell, like there's a whole big bearish thing happening. You understand? But when you zoom out and look at the higher time frame, you can see that, oh, if you just zoom out to the daily, if you just zoom out to the daily, you see that, oh, from the daily, we are having a really clean uptrend. We are having a really clean uptrend right here on the daily. You can see that, oh, we are really bullish. We're having a really good uptrend here on the daily. You can see. You can see what we're having here on the daily. Price pulls back. So now, when we are buying here, what's the target? Another high, right? For a new uptrend. So yeah, and now this one impulsive move would create what? A whole trend on the 4 hour time frame. Then you can use 4 hour time frame structure to follow it. Now, this 4 hour time frame structure, now you could use this because this is the best time frame for your structure, right? The 4 hour breaks and the 4 hour everything is just very strong. So you could use the 4 hour to even catch 4 hour retracements will give you good sales. Like you can see how many pips this would drop if as a 4 hour retracement. So the 4 hour retracements would give you good sales, and the 4 hour buys could give you what good continuation buys to keep following the trend. So just like that, you could continue buying, buying and buying. Then you can use the smaller time frames now, 15, 30, to follow this 4 hour, right? So hope you're understanding. So we have the macro structure, the micro structure. So use the smaller time frame to follow this big one, and you're able to what? Ride the trade to TP. Now you might not hold one particular entry to TP because it might be frustrating, price going up and down. So you can hold it to the safest level possible. So once price hits your safest TP, you go what to the next level. You go to the next trade. Price hits your safest TP, you go to the next trade, and that's how it goes. So if you trade like this, there's no way you trade every day. Because how many of these trades come every day? No way you trade every day. There's no possible way you would be in the market every single day, maximum 3 times per week. Because if you watch here, this entry was what, Friday, but it continued on Monday, right? So 1, and let's say you get the sell, 2, and then you get the buy, 3. Or if you missed, or you can get this buy and another buy from here. And there's no way you get 20 trades in one day. Some people trade 20 times per day. maybe, and 20 times 17 losses, 4 wins. I don't know how that works. I don't know, but there's no way you trade every day if you trade this way. And that's how I don't trade every day. You cannot catch a trade every day. Yeah, so that's how it is. And as you can see, around this point, market was kind of choppy. If you see, this point, market was kind of choppy. But before it became very clear that market was choppy, there were some clear entries I took from here and here. So I'll just explain these entries as my way of ending the session for today. So you guys can go and back test. So let's go to, yeah. So here on the 4 hour, why did I take this? I saw that, or let me use the 1 hour because it was clearer on 1 hour. So same trend, same storyline. You just have to, everything is bullish, same trend, same storyline. So here on this one, we can see that we had a very bullish from this leg. We've been having bullish move from this leg. Like this price has been kind of bullish, you can see. Price has been bullish. Yeah. So just like that. So price being this bullish, broke structure, break of structure. So after this break of structure, what did I do next to get this entry? Break of structure, price creates this liquidity here, pulls back. So where did I enter from? Look at 3 hour time frame. Okay. This was where I took my entry from. Right? This was where I took my entry from. The level closest to my liquidity was my entry, and that was how I took this buy. Same storyline, my target was what? Making a new high. And price did just that. So we take what? The the next trade was on the lower time frame. So if you listen to what I was saying previously, is that if you want to catch the next trend, what do you do? On this impulsive leg, you look for what? Break of structures and shift in structures and whatever. So here, I was able to spot this break of structure. This break of structure you can see from here. And then the liquidity, followed by the one closest to that liquidity. Whether you're using a structural liquidity or an inducement liquidity or any type of liquidity that we're going to talk about, that will be talked about when we start treating liquidity, right? Whether you're using any of them, right? Your entry is always the level just below or above that liquidity. If it's a structural liquidity, whatever level you mark as your liquidity, your entry should just be below it or above it if you're buying or selling, vice versa. Yeah, so this is my liquidity here. So my entry was just here, as you can see. So I took this entry, and the target was to what? Make a new high. After this new high, I left the market because I realized the market was kind of being ranging around this area so long. And some people would have been, trying to catch it, trying to keep trading. But I didn't. I just left the market. And then, yeah, from yesterday, how did I take further trades yesterday? Trade I took yesterday was because of this. When price take out this area, break this area. If you look at the daily time frame, okay, once price breaks here, it has made what? A high, right? And price has to pull back, you know. So I was expecting price to pull back into this range and take out this liquidity because if you watch this on the daily time frame, this was a break and liquidity first pullback. So I was expecting price to what? To come back down there. So I just used the smaller time frame to follow it up. And on the smaller time frame, I was on the 1 hour. As on the 1 hour, and on the 1 hour, you can literally see that after this break of structure, you see this pullback, this liquidity, and then the open close that was just below it was my entry. So I was looking at this open close, I thought I was looking at this level. I felt kind of confused for a while. I was also looking at this level. I was confused for a bit because price came very close and tried to move away right outside. I got confused that what if price was trying to induce and come back. But when I got confident to enter was when I checked the 45 minute. That's why you need multiple time frame analysis. I checked the 45-minute time frame and I saw something. On the 45 minute, this is what I saw. You can see there. RBS on 45 minute triggered. So it's when I saw that I knew that, yeah, price might never come back to the 2 hours RBS. So, but I just kept my SL enough so that in case it comes there, right, I can, I won't get stopped out. But I was very confident about this trade. And that was how I was able to take this easy, easy move without stress. And if you decide to add a trend line, maybe this one would work. Yeah, as you can see, kind of clean. No, not clean. Not clean. If you want to add a trend line, there'll be a trend line for this. But I didn't look at trend lines on this particular entry, but there will definitely be one hiding somewhere, maybe. I didn't look at trend lines for this particular entry, but I think there will be someone, there will be one hiding somewhere. Yeah, so that was how I took this. Any questions? Any questions?
Um, I have a question.
Okay, ask me.
Yeah, I know we are not into entries yet, taking out trades, but just just to ask, when market does a break
Okay,
and
if
then we
this
have a
is
liquidity.
perfect M30 trend line, yeah, price rejected this M30 trend line. Okay, you can ask a question. Ask a question.
Okay, yeah, when price does a break above, and then we have a liquidity hanging just say like let me use this last trade you took before yesterday's zone. That is at
This one.
the
This one.
yeah, good. Exactly. So let's say the way price broke above and there's a liquidity hanging just down there, and we have a structure just like we have now. Do we always use the first level just beneath the liquidity? And does this depends on the time frame we're looking at?
Yes, yes. It plays the time frame you're looking at plays a huge role, firstly. And secondly, right? Secondly, yes, it depends. It's is the level just below your liquidity. Like I said before, it depends on what you mark as your liquidity. If you mark the wrong liquidity, then you would get fucked. But if you mark the right liquidity, that level below your liquidity is the right one, right? So if you mark the wrong liquidity, then price could play with you. But if, let me say, if you marked here as your liquidity, this would be a very good example. Mark here as your liquidity. You might not look totally wrong, but you are wrong. You understand? Let's say if this was what you saw and you mark like this, and you mark, okay, liquidity, next level below my liquidity is this, you will get stopped out. Or let's say you say, okay, my next level below my liquidity is this. You see the way price would react to your entry a bit. or you get stopped out. Understand? So it's all about what the area that is your liquidity. So, but if you mark the right liquidity, the level just below it, like when I took this entry, let me check the 15-minute time frame. Like when I took this entry, right, this level, I couldn't find it on other time frames, right? But it made it unique. Like price, like I felt like price was hiding something from other people, like people that didn't look at this time frame. Because as you can see how it looked here, price just broke structure, goes back and left this liquidity, and then there was this level just sitting clean there, right? So if you had it like this, right, you could easily take your buy entry from here, and I took this entry. So you could easily take your buy entry from here. Now, if you check the 1 hour time frame, you will see that there was nothing like the open close here or this one here or this one. There was nothing there. So this felt like price was hiding something from the others, like people that didn't know this, that didn't see the 15 minutes would miss this. So it just made the trade look kind of unique. I said, you know what, let me take this trade. I took this one. That's why I took this one. So it depends on what you mark. Like the concept works. Like if you backtest every move in this market on hindsight, if you backtest every move on hindsight, right, you will see that the concept plays out over and over and over again. But on live market, it depends on what you were seeing. It depends on the time frame you were looking at. And there is no specific time frame. That's why you have to solve through all the time frames to see because if you know what you're looking for, when you see it on a particular time frame, it would look like, I don't know if it's just me, but my instinct tells me that okay, yeah, this one is clean, right? So when you know what you're looking for, when you see it, it would look clean. You wouldn't have any questions anymore. All that particular time frame would answer all the questions for you, and you take from that time for that part from that particular time frame. The next trade you could take from a 3 hour time frame. The next trade, like you can see that this particular trade, the answer hid on the 3 hour time frame. This one, the answer hid on the 15-minute time frame. This one, the answer was on the I don't think there was any time frame that has this level. If you check the 2 hour time frame, this level wasn't there. I can, I guess, yeah, you can see there was nothing there. So sometimes price will just hide the answer in some other time frames, like you would never see it on any other time frame. Like it might even make other time frame look so perfect so that you can miss. Like if I wasn't very articulate to take this, I would have marked this and be like, okay, price should come here. Plus, this is also a 2 hour level. Feel me? But the 45 minutes was hiding another RBS somewhere there. So you have to go different time frames, check all the time frames for the best entry. That was one thing. After checking all the time frame to know the one that offers the best, the cleanest setup you're looking for. If you know what you're looking for, the time frame that offers the cleanest, first of all, will tell you. And then secondly, you have to also know where to mark your structure from, because where you mark your structure from will determine the liquidity you mark, and the liquidity you mark will determine the level you choose. So all these things work hand in hand. So if you're marking the wrong things, you will see that when price eventually buys without you, go and look at where it bought from, check all the time frames. You will still see that the setup played out clean, but you missed it because you weren't looking. So you just look at the right time frame. And that's why I said that I don't really trade other pairs, because I've been so in sync with gold that I know the time frames that, like, if a move is about to happen, I don't know, I just kind of feel it that okay, this particular time frame, I've not checked the 45 minutes. Let me check the 45 minutes. Maybe it might be hiding something. Let me check. You feel me? So I'll just check there and check here. And I also showed you guys multiple examples in previous videos and previous classes about the where the 3 hour was hiding the level and the 45 minutes were hiding the level. I've showed you guys multiple examples like that. If you guys can remember, I showed you guys somewhere something here. Let me find it. Okay, something around here where 45 minutes hid 45 minutes was hiding an RBS somewhere there. Let me show you. 45 minutes hid an RBS somewhere there. And no other time frame had that level. No other time frame had it. Only 45 minutes. So it's like that sometimes. You have to look at different time frame. You have to open your eyes and look. If you don't look, you won't find anything. Okay, so this was the level, I think. Yeah, this was it. So if you were looking at another time frame, you would miss this trade. Can you see? This level was non-existent on any other time frame. I remember this trade because I took it. This level was non-existent on any other time frame. Non-existent. You won't find it. You can see here, there was nothing. If you looked at the 1 hour, nothing as well. Price just bought from a week from nowhere, but 45 minutes hit the level. So it depends on which time frame were you looking at the moment. That's why I trade only gold. I don't like being distracted, checking multiple things. Look at it. If you were trading on the 1 hour, you would most likely pick it and you miss it. So you understand. So the time frame you're looking at plays a huge role as well. Where? Annotate for me. Here, open close break here. Yes. Yo, this one could also work. This one could also work. But the 45 minute gave you the best entry because you know that most times, right? The 45 minute gave you the sniper entry level, right? And I don't really use open close break much. Like I don't really use it much. I use it, but not too much. So that's just it. So I don't really use it too much. Another place that a level was hidden, I think here was the 3 hour time frame. If I'm not wrong, I guess. Or no, 2 hour time frame hit the level here. 2 hour time frame. I'll tell you that if you checked any other time frame, you wouldn't see the level that was on the 2 hour time frame right here. On the 2 hour time frame, this level was sitting pretty here. RBS. Can you see? Go to the 1 hour time frame. You won't see this. 4 hour time frame, it's not even there. So time frame plays a huge role. That's why it's always advisable to do multi-time frame analysis. Can you see there's nothing here? Nothing at all. It looks like just, open, close. Just you can see that there's nothing here. Look at the 30. There's nothing on the 30. If you look at the 30 minutes, there's nothing on the 30 minutes as well. On the 30 minutes, you might even pick here and miss it. Pick here, you miss it. So you see. So time frames plays a huge role in picking your levels and marking your zones because every time frame will show you something different. So check multiple time frames to be cleared. Right? I'll be ending the session now. Any question? Any last question before I end?
I'm okay, so thank you.
Okay, so I will end the session now. I'll send the video later. Can I?